Review of the US stock market. The US stock market opened with growth in the first hours of trading. Optimism reigns in the markets again. Tesla made another jump of 20%, which is quite a lot, and at this point we will begin our review to keep up with all the interesting events in the stock market. Go. Tesla shares. What is happening with Tesla now? I said that in the future Tesla may be a quite worthy company for investment, but this will only be in the future, and now I consider investment strategies to be extremely optimistic. The securities are too hype and are subject to enormous volatility, and this is no longer the sphere of rational investments, but already a gamble on speculation in securities. We see that before the growth there was a pin bar near $600 per share, and most importantly, take a closer look that it formed lower. This indicates a very strong sale that was difficult to stop. My opinion on Tesla is to follow the trend. After a panic, it can continue to hype further, but it is best to trade within the day according to the current trend. It is currently bullish at the moment. Is it worth investing in Tesla? The question is actually about risks. Let's not forget that the company still has 1.5 billion bitcoins in reserves. On the one hand, it makes the stocks even more volatile and aggressive, and on the other hand, it gives huge opportunities for long. If Bitcoin is doing well, then so is Tesla's stock. Now the comparison is realistic, but it is very risky. Are you willing to take this risk or not? Activision Blizzard shares. The stock of this company was in favor during the 2020 pandemic, and many investors have a question. What will happen to the company in 2021? One way or another, but you need to realize that what is happening changes our world and it will never be the same again. The entire tech sector will be especially strong. In the times to come, technology will play an even greater role in everyday life than we could imagine. The Activision Blizzard company is engaged in the video games and entertainment industry. The gaming industry itself was quite popular, and 2020 just gave it an impetus for development. Let's imagine the following picture. A quarantined consumer watches TV shows, Googles sites of an intimate nature and plays video games out of boredom, but he liked the video game so much that he will continue to play it even after the quarantine. This is exactly what happened with the gaming industry. Many people have checked out the new games, and the abolition of lockdowns and quarantines will have little effect on aggregate demand. I believe that this direction will also be promising, and therefore I would include them in my long-term portfolio. Domino Pizza shares. Here, of course, the growth may not be as good as in the gaming industry, but it is worth understanding that this company also has everything ahead. During quarantine, they were also on a par with supermarkets, games, the tech sector at a height, but this catering network received good profits during the crisis year, because everyone sat at home and ordered pizza and rolls. This had a good effect on the company's shares, but in the future they will be able to compete for a place in the sun with great chances. The company's business is developing successfully, the schedule of their shares cannot but rejoice the shareholders. In general, a classic growth stock. The crisis gave them a good head start. Although sales did not meet the expectations of analysts in the US, I am sure that this company will continue to develop further. Now is the best opportunity to buy stocks on a drawdown. Forex Market Review for March 11. Markets continued to rise yesterday, while Asia is trading in positive territory. There are also signals in the forex market that other stock exchanges will trade in positive dynamics, but there are also fears that may occur. You can find out what these fears are here. Currency pair EUR/USD. As we can see on the chart, the dollar began to weaken again, but there were no particularly strong support levels at this price value. The euro-dollar can be called the anti-dollar index, because due to the structure of the latter, there is an inverse correlation with the index. If the euro-dollar goes up, then this is good for all stock markets, but if the opposite trend is going on, then this is a reason to think carefully about what is happening. And now a new figure of technical analysis has formed on the hourly chart of the euro-dollar. Of course, it is absolutely not a fact that the figure will work in this case, but I would take it first and foremost as a sign that growth may fail. In my trading recommendations, I recommend entering a short on the breakdown of the pattern down.
If it breaks higher and goes higher, then the fears are false, like the figure itself, and it is also a signal that everything will be fine in the stock markets.
Currency pair GBP/USD. Well, I inform you that our signal for the pound dollar has worked perfectly. In previous reviews, we gave signals that quite a few timbers were formed near the lower trend line on 4-hour charts and told you that this is a signal for a reversal from the border. Of course there was a risk, because the signals on the 4 hours chart are less stable, but all trading is a risk and a game of probability theory.
If you use risk management, money management, enter on the basis of logic and common sense, then no matter how your separate deal is closed, you can close the year with a profit, and this is actually the main task of any trader, speculator and investor.
The approaches are just different. USD/JPY currency pair. There was a correction on the yen, but this did not stop the trend. As you can see, despite the oscillators, the asset continues to move further along the trend and is not even going to reverse strongly. I think that we will break through another level. There is a very strong bullish movement, but then many can start fixing profits and the price will be more vulnerable to bears. There is, of course, an even higher level, but it will become much more risky to work with this trend than before breaking through the current levels. Therefore, for speculators that work within the day, I would recommend after these events to look for another currency pair to work with. At this point, the trend may stop moving. Review of commodity markets. In this review, you will learn all the nuances of what is happening with silver and other commodity assets. Silver. The situation with silver is as follows. In fact, we have already talked about the prospects of silver more than once, but you need to understand all the subtleties.
In the long term, not only have we noted an increase in demand for this metal, but so far prices have not responded to this.
In the long term, you can buy right now, but this is the term, just like with gold. Term from 6-15 months. But on the short term, it is not a very profitable entry point right now. It is worth looking closely at silver at the support levels that are marked on the chart. The red lines indicate weak levels and the black ones are the strongest. It is on them that it is best to buy. But you also need to wait for signals to confirm purchases. Don't expect price to bounce off levels like a ball. They are just pointers. Oil Brent. Oil slowed down in the swing zone. From here it can start moving further up to $75 a barrel. The driver for the growth of oil is now the OPEC agreement not to increase production. The current month of oil is unlikely to be strongly threatened. Economic recovery, as well as an added bonus, new attacks on oil facilities could give a boost to oil. Also on this I would look closely at oil companies, which in the event of economic recovery will grow to pre-crisis levels as well as renewed maximums. We continue to work with the trend, but we do it very carefully. Enter only those signals in which you are more likely to be confident and do not risk on the last money. Platinum. Platinum fulfills our forecast. For risk management, a mathematical ratio of risk to reward of 1:2 and 1:3 should have already been achieved. This means that here you can already exit the trade with a profit and not worry about further price movement. Of course, I do not rule out that the price may go even higher, but remember that greed can lead to large losses in the event of a price reversal, and therefore I would stick to the rules of your trading plan. That's all for now. There is another strategy if you are not ready to let go of the trade. You control stop. That is, to move the stop loss after the tailed candles, which are further formed along the trend. Yes, you can earn less than now, but this is a more optimal strategy at the moment if you want to squeeze a lot of profit from the trend and not close the trade with a negative.